Have you ever seen this happen? A CEO comes out with what sounds like incredible news, but it just completely blows up in their face and makes investors furious. It's one of those bizarre situations you see on Wall Street, and today we're diving into a perfect example of it. A story about a business that's absolutely booming while its stock price seems to be stuck in the mud. And trust me, there's a lesson in here for anyone who invests.
So it all kicked off with this message. 3 simple words from the CEO of a company called Rezolve. Hi everyone, relax. Now, you'd think that would calm people down, right? Nope. Instead of putting out the fire, these words were like throwing gasoline on it. It sparked an absolute firestorm among shareholders. So what was it about relax that got everyone so wound up?
Well, right after telling everyone to relax, the CEO just laid out this incredible list of wins. He said Rezolve was the most exciting and the fastest growing company he'd ever built. He said it had the best product, the most experienced team, and the most cash it's ever had. I mean, on the surface, that sounds like an absolute dream for an investor, right? A business that is just firing on all cylinders.
And that brings us to the million-dollar question here. If the business is doing so unbelievably well, why did this message of success feel like a slap in the face to so many people? Why did it cause such an uproar? Well, to get to the bottom of that, you have to look at the other side of the coin.
Yeah, to really get what's going on, you have to step out of the CEO's shoes for a minute and see things from the investor's perspective. Because for them, the reality of what's been happening feels completely different.
And this quote right here, wow, it just captures the raw feeling perfectly. One investor said, "This really pissed me off. It's almost like gaslighting." Think about that. They felt like they were being told to calm down about a problem that, in their eyes, management itself created. That's not just frustration. That's feeling like you're being told your reality isn't real.
And here it is, the great disconnect, laid out side by side. Management is saying, we are a huge success, but investors are shouting back, this is a terrible stock, and your actions are sabotaging us. And get this, they're not even really arguing that the business is bad. They're saying the success of the business isn't making its way to them, the shareholders. So what's the action that's causing this deep divide?
Okay, this whole mess, it all comes down to one really important financial idea: stock dilution. This is the secret ingredient, the ghost in the machine, that explains how a company can get more and more valuable while the price of each individual share just goes nowhere.
So think about it like this. The company's total value is a giant pie. As an investor, your shares represent your slice of that pie. Now, the business might be doing great, making the whole pie bigger, which is what you want. But with dilution, the company just keeps issuing new shares. It's like they're constantly cutting the pie into more and more and more slices. So even if the pie itself is growing, your personal slice feels like it's shrinking.
And believe me, this isn't just some small, abstract concept. This is real, and it's happening on a massive scale. In just one recent move, Rezolve created 62.5 million new shares. That is a huge number of new slices being cut, watering down the ownership for every single person who has already invested.
Okay, look at this table. This shows you exactly how dilution can just crush your returns. Let's say the company is worth $1 billion, with 300 million shares out there. That makes each share worth $3.33. Now, let's say the business does amazingly well and doubles in value to $2 billion. Awesome, right? Your investment should have doubled. But what if management also doubles the number of shares to 600 million? Well, do the math. The share price goes nowhere. It's still $3.33. The company's value doubled, but the investor made absolutely nothing. And that is the core of all this anger.
You see, for these investors, this isn't just a one-time thing. They feel like they are completely trapped in this awful, predictable cycle, a pattern that makes it feel almost impossible for the stock's price to ever actually reflect how well the company is doing.
So here's the pattern they describe. First, some good news comes out, the stock starts to climb, maybe it gets over that $5 mark. Investors are getting excited, and then bam. Step 2, the company announces another share offering, more dilution. Step 3, this just kills all the momentum and the stock price tanks. And then the really frustrating part. Step 4, a little while later, management comes out and publicly complains about how low the stock's valuation is. You can see why people are pulling their hair out.
I mean, this quote just says it all. It perfectly captures the psychological damage this cycle is doing. Investors are so used to this pattern that anytime the stock starts to go up, it doesn't bring excitement, it brings anxiety. They're just bracing for impact, waiting for the next wave of dilution to come and wipe out their gains.
So, where does that leave everyone? Well, investors are basically stuck between a rock and a hard place. On one hand, they actually believe in the company and its potential. But on the other, they've just completely lost faith that management will ever let them actually share in the rewards.
And this problem is not going away anytime soon. The threat of even more dilution is just massive. Right now, the company has the green light to issue over 130 million more shares. That is a giant dark cloud hanging over the stock, representing a huge potential dilution for everyone holding on.
You know, when you boil it all down, it seems like there are two possible paths forward here, and the choice is completely in management's hands. Path one is what investors want, a partnership. Raise money carefully, let the stock grow with the business. But path two is what investors feel they're getting, the piggy bank approach, where every time the stock gets a little momentum, it's treated like an ATM to be rated for cash, which just keeps the share price stuck in place forever.
And so that's where we're left. There's no denying the business is growing, and the opportunity seems huge. But as long as this huge disconnect exists, the billion-dollar question for anyone involved is a simple one. Will investors ever actually get rewarded for funding this journey? Or is this destined to just be a great company that's a truly terrible stock?